this bubble has finally burst. It has started to burst. And it looks like to me we're starting the next wave down. The next wave down is what's going to really say that something different is happening. This is not a correction, and I think we are in that next wave starting in the next so many months. We'll see that. That'll take us down. We'll be down 50 to 60% in things like the NASDAQ and the S&P 500. And now you'll know this is not a correction. This is a major crash.
In today's video, Harry Dent, author of 0 Hour, discusses what's up with bonds, the next moves of the Fed, the raging inflation, and the coming recession. Before listening to him, please ensure to smash the like button and subscribe to the channel.
The index I track the most, especially in these times, the NASDAQ has been down 38%. And one of the things I look for, I had to study bubbles because my early research was more about demographics. When did generations spend more, and why we were going to see the greatest boom in history because the baby boom was such a large generation. But bubbles have their own logic, and they usually last about 5 years, and then they crash twice as fast. But the only way especially since the government has been pushing this and pushing this and pushing it, every time there's a slowdown or the markets crash at all, they just stimulate harder. So they've been feeding this bubble. You don't know if bubbles really crash until you get about a 30 to 40% first crash. So that's why it was critical to me when finally in 2022, the NASDAQ, which is the lead major index for me, was down 34% and then ended up with a new low after that, down 38%. That told me this bubble has finally burst. It has started to burst. Now, a bubble of this magnitude, like 1929 or like 1972, which was not a bubble, but it was a long-term peak, okay? I mean, it takes about 2.5, 3 years for the whole crash to happen, okay? So all we've seen so far, and we have seen it, that first crash, like you said, the S&P was down, 20-some% at its worst, and NASDAQ down 38% at its worst. And then it looks like to me we're in the next wave down. We've been going more sideways since June of 2022, and it looks like to me we're starting the next wave down. The next wave down is what's going to really say that something different is happening. This is not a correction, and I think we are in that next wave starting in the next so many months. We'll see that. That'll take us down. We'll be down 50 to 60% in things like the NASDAQ and the S&P 500. And now you'll know this is not a correction. This is a major crash. So we're still in the process. I feel like the ultimate low at this point for stocks is likely to be, if I had to pick a day, I'd say it's like summer, like July or so, 2024. So we're still in the early stages. And we still have, and I need a confirmation at this point to know that this crash is continuing and will go a lot deeper. We need to break the last low, which again, I'm tracking the NASDAQ as my number one index, 10,088. Now we bounced, that was the last low. We bounced from there and we're about 8% above that now, but it would not take long to get there. We break that 10,088 and that's when we'll see the next wave confirmed, and it should get nasty pretty quick after that. And then we'll be deep into something we have not seen since 2000, 2002, and some of those other previous crashes we talked before. So it is happening. Now, why does this not happen? Governments are fighting this with everything they've got. I mean, there is never, the Great Depression only saw a little bit of stimulus. Once we got down so low in early 2009, the Federal Reserve and central banks around the world just pulled out the guns. They've been stimulating in higher and higher amounts, $10 trillion just since COVID, okay, before they started to tighten. And finally, that's when they finally blew it. They were stimulating steadily enough to get away with it, but when they panicked on COVID, $5 trillion in monetary and then $5 trillion in fiscal, and fiscal is far more potent to inflation. Then all of a sudden we get this 9.1% inflation when we've been scraping 1 to 2%, which again, my forecast said way back in the 80s, we would go down to near zero inflation because of the slower and slower workforce growth is slowing in our economy. So that's where we're at. They've been fighting this since 2009, stimulating more and more. But since where they blew it, even in that stupid strategy, from my point of view, that has to fail because you can't live on stimulus forever, they overdid it in COVID and they were forced to tighten. And now that they're tightening into an economy that, from my measurements, I've got the best fundamental indicator I've ever seen in history, and I'd love to see somebody challenge it. This whole 46-year lag for peak spending that shows when generations are going to spend more, like the Bob Hope generation, 42 to 68, baby boom 83 to 2007, and why we went into a slowdown in 2008, and why it took so much stimulus, and we still, every time they pull back, we go down. We're still in a weak period until 2024 when the millennials come along. So I think that this tightening is going to cause the economy and stocks to react faster than they think, and they're going to be now behind the 8 ball and turning around, and everybody's looking for a pivot. They can't just turn around and pivot on a dollar.
Now, why the NASDAQ as opposed to the S&P 500? Why is that your overall metric for where the market and the economy is going at large?
Well, the NASDAQ is more volatile. It's more the tech stocks, the more aggressive stocks. So it's going to go up more when it goes up, and it's going to go down faster. And in the S&P 500, it's almost like when things start to look questionable, like in the last year, people say, okay, well, I'm not going to get out of stocks altogether, although, of course, I've been advising that for a while. They'll get into safer. So the S&P 500 is seen as more stable as the NASDAQ. So the NASDAQ and the Russell 2000 small caps are the more volatile indexes, which go up the most and go down the most. And that's why I'm tracking the NASDAQ. The NASDAQ is the lead index here that's leading the way, and the S&P follows. And in the end, they'll all be down 80% or more. But the NASDAQ has been leading this crash, and that's what you would expect. The all-time high was November 22nd on the NASDAQ and January 4th of 2022, just after that on the S&P 500. And let me just make this clear. All this is going back to the early 2009 lows of the last major crash, okay, after 2007, 2008 crisis. It's not erasing all the gains and all the bubbles and stuff before. It's just going back to the last lows, and I have a similar forecast for housing. Housing is just going to go back to its 2012 lows. Housing takes longer to correct. It took 6 years from top to bottom. It peaked before stocks the last time, way after. It's just going to go back to 2012. But you know what that is for the average house? 50%. That's how big a bubble we've had in housing. So that's what I mean by everything bubble. Commodities, gold is bubbled. Gold is going up more than stocks at the best. So everything goes down. Stocks, real estate, commodities. Commodities have gone down the most first. Gold is holding up because it's seen as a safe haven until things failed. Same thing happened in 2008. But stocks are the lead now, and that's why I'm focusing on the NASDAQ, the more racy of the stock index. So we had that first crash down 34%, okay? And then it bounced substantially, and it's gone back and forth. It went to make one more new low, down 38%, the NASDAQ. Now it's back up towards 11,000. And it has to break that last low, 10,088. I think in mid-August, we already started the next wave down. So that's the second point real quick. When you see a major bull market or the beginning of a new major bear market, like 1929 to 32 or 1972 to 75, there will be 3 waves up or down. And now we're talking down. So again, first wave bottom in June, bounces sideways since. We're in the third wave down now, but it has to break to a new low to say, hey, it really is that third wave, and we're going to go a lot lower, okay? And so 10,088 is the line in the sand on the NASDAQ there. And so when we break that, it's going to go down a lot more. Next thing you know, we're going to be down at the 2020s. Now, this is just going back to the COVID lows of about 66, 67, about 6,700 on the NASDAQ. That's my next target. So that's the next wave, the middle wave. And then that'll bounce, later in the year. And then we'll have one final wave down, the third wave down, and that'll cause a bottom. And that's, again, if I had to predict today, it'd be mid to late 2024. So it takes 3 waves for a major movement to happen. We've only seen the first one, and it looks like to me we're starting in the next wave, the middle wave. But that middle wave will not be confirmed until we make a new low over the 10,088 low, which was actually in August of 2022 in the NASDAQ. So again, the time to get out is on the bounce. If you wait until we break that 10,088, it'll be down fast. Okay, next thing you know, we'll be at 6,700. And then you're down 55, 60%, and you're like, oh my God, I've lost my life savings. And that's not even the bottom.